Hey, what's going on, guys? Welcome back to Way Up Trading. Now today I want to go over a couple of different things I'm seeing on the charts today. We had a real rug pull of a day. Charts wind up going a little bit crazy, starting off a little bit bullish in the opening hours, and then from about midday, just a little before midday and onwards, things took a turn for the worse. Started dropping off and after breaking some key levels from Friday, and trickled all the way into today. And we're seeing the SPY head south towards some of those break levels, which are indicating we may have possibly seen the blow off top. How much further can this go down and drop down towards other levels? We're going to take a look at the charts, dive in and see exactly what things are looking like for the next couple of days out, as well as see what potential opportunities are available throughout the next couple of trading days. And we're going to do all of that and more right after this.
How about that stock market?
Right now I got the SPY pulled up here on the 4-hour time frame, and just got a couple of indicators pulled up that I typically will use in order to get an idea of how things are moving. And very simple, we're going to keep it very light and easy. Obviously volume, 4-hour chart we got pulled up here, and as well as one of my favorite indicators as well. This is the trend lines with breaks set up here, as well as the 921 EMA cross and the 50/200 moving average cross. Also the ultimate moving average indicator here, which is this green line, as well as the red outlining here. And finally, the momentum indicator I like to use, called the JS trend candle. Now these basically are showing the difference in the changeover and what we're seeing in the momentum. Supports and resistance are also opened up here as well, with breaks also by Lux. Now these are basically giving us an idea of where we stand on the charts, and the way things are looking right now are pretty bearish. We did wind up breaking some key resistance areas and some key levels here that we needed to hold in order for the SPY to continue to be bullish and remain bullish and make its way back up towards those levels that we were expecting to potentially get with the way the blue chips have been running, and so on and so forth. However, we have now broken what I was calling the golden zone between 433 and 60 cents and roughly about 436. We are now officially out of that zone. We've now actually lost the 50 moving average on the 4-hour. This actually took place on Friday's trading day, and we are now out of this pennant setup that we potentially have had, and are actually starting to play out this head and shoulders that we've been looking at here since the top that we touched up at about $443 and some odd cents. Now that's actually playing out. I mean, now that we've broken down this level, the overall move is considered to be bearish, and this thing is going to most likely play out to the downside here to go ahead and hit our next support levels. Two support levels that I'm looking at are roughly around 431 flat, and then from there, if we can't hold 431 to 430, our next level of major support is roughly at about 425, and that looks to be the case of where we're going to wind up going here if things don't turn around soon. Huge loss or dump on NVDA today, which dropped down roughly to about $400 flat, which dragged the SPY all the way down with it. Opportunities to play puts were the game once you caught the changeover and momentum from this morning's run on some of the main stocks, such as Amazon. Roughly for a brief moment we caught that as well, catching that $131 mark, and then coming back down, retracing. But the setup at this particular point is bearish. I mean, we have to call a spade a spade. Things actually wound up playing a different way than I anticipated. Most of the movement that we saw in the last couple of weeks has been all related to a short squeeze basic setup off of the OPEX dates that we've been discussing here for quite a little while, which basically squoze most stocks in the market and sent the SPY up to crazy levels. A major indicator here, which is we're back on a daily chart. You can see that we are still above this level. We did break the 9 EMA and have come down to now touch and test the 21 moving average, as well as my ultimate moving average indicator here, which is roughly, again, just about that 430 mark. If we do break that, I definitely see us dropping down to a much lower level, possibly into the mid 420s, and then ultimately down to go test that 418.86, which I have marked here by this red port line, which also coincides with the 50 moving average on the daily. So key areas to kind of hold here. If this thing doesn't hold, the SPY is going to start to look really, really ugly. So we need to be cognizant of where we actually are positioned in the moment. The shorter time frames don't look much better and have been pretty much a waterfall since about Tuesday into Wednesday of last week. Once we broke that smooth moving average, this is the gray thicker line here, SMMA is the indicator if you would like to look that up and add that to your charts. That basically was then crossed down. We lost that area here, which was support roughly about 436, just in that golden zone I talked about a minute ago. Once we lost that area, we went back up, retested it, which was confirmation of the drop, and we actually tried to attack it on a couple different occasions, turning this into a full-fledged distribution pattern, and obviously at head and shoulders, as we talked about previously, dropping this down to lower levels. If this full head and shoulders plays out, we lose that neckline at about 431. Look out, 425 on the way, 418 to follow. Now there is a chance, not only a chance here, we have to hold and turn around in this area for some way, shape, or form for bullishness to play out. If we look at this on the shorter time frame, on the 15-minute, and look at it from a perspective of Elliott wave analysis, you can see we are actually in a situation where we are now could potentially be heading to a fifth wave if we can turn around from here. And this is right off of the smooth moving average that I had mentioned earlier on. 431 is a huge area to hold on to. If we can hold 431, we may be able to get the fifth wave move. The 443 move that we talked about a little while ago, which we hit at our highs closer to the OPEX date in mid-June, wind up playing out just a little while ago. We've had the full retracement here. Again, it looks like it head and shoulders. From Elliott wave perspective, this is just a retracement on wave 4, and we can potentially turn around here to push up to wave 5 at the 1618, which would give us a target here of about the 151.74 mark, which is the area I've been hoping to go ahead and start to get ready to hit in a little while. I'm more personally leaning toward more bullish on the market. However, I am protecting myself with downside puts at the 404 strike. Longer dated out in September 15th was the strike I actually picked up today, and kind of working my way into it depending on how things go. I don't see this fully turning into a full-fledged bull market. Now, things can happen. We understand that there's this whole revolt and mutiny situation that's happening over in the Kremlin and what's happening in Russia. Possibilities of hearing something like that and Putin potentially falling can have a big impact on the markets and probably send this thing up crazy, but we can't bet on that. All we can do is play the charts that are in front of us and protect ourselves and hedge upsides and downsides, and that's just one opportunity and one way I'm looking at it. I'm going ahead and actually hedging my upside position with a longer dated put, which is right now September 15th, 2023. 404 strikes is what I'm looking at this particular point in time. However, if we do bounce and we do start to get a reversal, which I do still think is possible on some of the blue chips, I'm pretty bullish right now on Tesla. Even though we took a huge hit, we're going to pull Tesla up in just a moment here. Even though we took a huge hit on Tesla, I can see that it's starting to turn around eventually. It had a nice little bounce today off of that low level at 240. If it turn around and start to see some kind of upside, we can probably start to see towards that 260 mark break again. It is moving pretty crazy volume. As far as the SPY is concerned, this could potentially be a fourth wave ending and going into a fifth wave, as I mentioned before, bringing us to potential levels roughly at about 251.74. So hopefully that's the case, but if we do lose this area, this is a very key, crucial area here to hold. Again, that head and shoulders was already formed. If it doesn't hold, we're going downwards. If it does, we can get the bounce from here, and we can start to hit this level here up at that 251 off of a fifth wave extension. That would confirm it. This is on the 15-minute chart without after hours on, so do keep that in mind. I typically like to use charts that involve after hours just to get as much information as I possibly can on how things are moving overall. But we look at it a little from a different perspective, which we always need to do. We want to make sure we look at all different time frames just to be clear on what possible outcomes can happen, and that's the approach I like to take. Let's pull up Tesla real quick. Now, Tesla also from a no after hours, looking at just volume from an Elliott wave perspective, Tesla also is in a position where it may be seeing its fifth wave possible extension after a full fourth wave retracement, either to the 1618 or to the 283 to the one level at 283.77. I actually originally entered calls in this morning, wound up getting roasted on those once the market got pulled. Took a little bit of a loss on those, roughly about 25% on those calls. However, I do still believe we're on a very tight spot where things can turn around if we get something happening in the morning. Tesla wound up finishing the day 241.05, down 6% on the afternoon. Crazy day. I actually wound up entering calls expecting a bounce at a certain point, and it just lit me up and just took a couple of gains that I made this morning on some other plays, including Lucid, Coin, and Amazon. Either way, if we are in that particular position where we may get this bounce, we're in a key area to do it. 400 moving average I have right now on Tesla is at 246, and right now we did get a little bit of a bounce. I'll zoom in a bit here. Got a little bit of a bounce on the smooth moving average, but are under it at this point. We need to get back above the smooth moving average. Sits roughly about 244.83. and eventually get over this 400-day moving average on the 15-minute time frame. If we can get above those areas, I can see a potential breakout above this downtrend that we're in, and us actually starting to play toward the upside within the next 2 to 3 days, potentially hitting back toward the 270 mark. As hard as it may be to believe, the 270 mark is still within reach, even from the depths down of about 240 on a stock like Tesla, if the market can turn around and find support off of that $431 level on the SPY. NVIDIA has already been through the gambit. You know, it's really right now just kind of finding its bearing again after an ABC correction on NVIDIA. It looks like it has found its support here back above the smooth moving average after a crazy run that's had over the last few months. And if it can continue to find support here, it actually did bounce back pretty well after taking that huge drop today from about the 426 mark all the way down to about 401 flat. Huge dump here. If you caught any of this on the downside, you probably made an absolute bag on this thing. So congratulations to you if you caught it. Personally, I sat on my hands after taking a little bit of a loss on Tesla, so I sat on my hands from there. But if you were able to go ahead and play the downside on some of these bigger name stocks, the money was all over the place to the downside, and you probably made out really well on these. However, as far as upside is concerned and trying to go long on these things, the opportunity can still be in the air, but we're going to sit and watch and see how things play out for the next couple of days. NVIDIA right now is at a very crucial spot, trying to hold that $400 level. If it does, upside can ensue. If it does not, look out. The gap is waiting to be filled. Everybody's waiting for that gap to be filled right now. So who knows? We'll see how things work out with the rest of the market. If the rest of the market can hold up, we'll see. But right now, it's looking kind of grim. That blow off top may be potentially confirmed. Everyone's been waiting for it. We'll see what happens. The major levels on NVIDIA, you can see we're in that bull flag set up here that I have with the green and red lines and midline as well. Lost the midline, lost the top here after being rejected. It looked like we're going to most likely play this downside, a bottom support here from the uptrend, which is roughly about $386.58 or so, potentially around this area in the mid 380s. So we'll keep a look at it from a harmonic perspective. Right now, we did hold that 405.43 area. We did hold on to that, luckily, off of a bullish bat pattern. If we can go ahead and continue to hold this area, we can start to see back up toward the midline of the bull channel, which take us to about 415.86. with a potential target back to 425.04 as long as the rest of the market holds up. Again, I mentioned before, if it does not hold this area, 395.52 is next up, and then from there down the bottom end of this bull channel will be most likely the next short-term move to the downside, which would be about 380s to about just about 377 as a potential downside. If 377 hits, it would lose this bull channel, and then look out below, we're coming down all the way down to fill that gap. So be mindful, that gap was roughly about the $304 mark. Long way down if we do break that 377, 378 mark. As far as short-term SPY is concerned, I'm hoping for a bounce. I'm just gonna hope for it. We're gonna look to see how things move tomorrow. We'll see how things move with the rest of the market tomorrow, how things move on some of these blue chips, and the opportunity might be here to the upside. I'm still gonna sit on my hands just for a little while longer. Again, I am hedged. I always advise to make sure you hedge your position on either end. I have my puts out, like I mentioned before, on September 15th, 404 strike, and it will be averaging into those over time, and we'll see how things go. But right now, I am expecting a short-term bounce, but we won't be in the clear waters for a lot of these stocks until we get back on the SPY, roughly above about the $436 mark. If we can get back above that area and hold on to it, we can go back bullish. But for right now, the downside may prevail. Only problem is that we are not 100% confirmed yet. So do take it easy on these charts. Pay attention to what's happening with the trend. Watch the news. Pay attention to what's going on around you. Keep your head on a swivel. Opportunities still here on either end. However, we got to make sure we protect ourselves while we're on the way up, making the outcome income for 2023. If you like more content like this, don't forget to like, subscribe, comment, leave your questions down in the comment section below, and I'll be right back to them as soon as possible. Also, do consider joining and getting involved here with the group, Way Up Trading Group. There we call out a lot of different plays, go over different opportunities in the stock market to make some money and to put some profits in your pockets. Link is down in the description. Make sure you go and follow them on Twitter. We're going to be here each and every day, growing our portfolios together and making the outcome income for 2023. Like, comment, subscribe. I'm going to see you on the next video. Peace.